G'day, amigos. It is value after hours, 10:30 a.m. Now it's daylight saving time on the West Coast, 1:30 p.m. East Coast, which means that, and I got the dates, the times right, I think. It's 5:30 p.m. UTC. It's 5:30 a.m. Australian Eastern Standard Time. So I guess there won't be many Aussies on this one. How you doing, fellas?
Good to be here.
I'm joined as always by
quite strong.
Jake Taylor and Bill Brewster. If you'd like to listen to this live, you can just go to the Acquirers Podcast YouTube channel, hit the notifications, and it'll let you know when it goes live. There's like 7,500 people signed up, and we're getting a few hundred now on the podcast, which is up a lot from the 10 or so that we started out with.
It's not so bad.
There used to be more hosts than listeners.
Yeah.
For a while. For almost a year and a half. But then we exploded higher.
Now it's exponential.
That's right. Ian's got the bots working.
Wild times in the markets. Oh, here we go. An Aussie from a place I can't pronounce in Hungary.
What's going on in the markets?
Well, some unusual things. Small, cheap junk is having a bit of a moment, although maybe it's shifting back to tech again today. Who knows? It's we're on a knife edge all the time here. But there's been a lot of junk. Sorry, JT, cut you off.
I was just saying, you're probably better off not trying to watch it too closely all the time with this chop.
Yeah. Yeah, I've taken to only looking after the close.
Yeah, I don't know. I just know that apparently Altria is a meme stock, which is sweet. Let's get it going, Wall Street Bets. Do your thing.
Dude, Wall Street Bets. So I sent you guys this morning, but the Wall Street Mod Twitter account has like 850,000 followers. I was stunned. It's exploded.
It is kind of funny and entertaining to follow until it ends in tears if it does.
It's been amazing.
As are most things. Coke binges are fun while they last, and then you die.
That's been the policy of the Federal Reserve, hasn't it? That's how we've kept the party going so long.
I don't know. I think that policy did a damn good job through all this. If you had said that we were going to stop the world and we were going to come out and have life be pretty normal on the other side, I'd have told you that you were out of your mind. And I would definitely take this over mass default and layoffs and coming out of this into depression. Fuck that.
You don't think that's what we've got anyway? Like, isn't that happening under the...
No.
That's what's happening to everybody on Main Street. Wall Street's having a party.
Yeah.
Main Street's like getting kicked out.
1%er.
I mean, look, I'm not like, my mom struggles. I'm not some 1%er that doesn't understand that people struggle. Like, I get it. I'm telling you right now, she sells real estate. She's generating commissions because people can pay for homes. Like, I don't want a scenario where everybody is defaulting on their loan and we have mass implosion. Like, I think that that's a crazy thing to advocate for. So I think they did a good job. Now, are there going to be negative consequences? Yeah. But we fucking shut down the world. Of course there's going to be pain eventually for the market. And, hopefully the wealth effect can start to get this, we can get this thing going again here pretty soon. Personal savings rates are at high levels. Now, how much of that is in the wealthy's pocket? That's a problem. So, you got to figure out a way to fix that. But, like, to advocate for just shutting it down, I think that's a nonsense argument.
Didn't we shut down, though? Wasn't that the issue? We shut everything down?
No, but we got people through. I mean, like, okay, so let's talk about the people that bitch about airlines. So what we really wanted...
Well, hang on. Let me tell you what my topic is today.
Oh, okay.
My topic is airlines.
Okay,
Yeah.
now go.
So like, people really wanted the airlines to just not get any help, right? All those union jobs, just fire them all, fuck them, right? All the pilots, release them. Let's cut it down to bare bones. Let's wipe the equity out. Let's restructure the debt. Let's do it to every single industry. I'm sure it'll be fine. We'll like reset to this utopia where people act like, responsibly. That's insane to me.
Yeah, if you shut it down, then you got to bail it out. But you don't have to shut it down in the first instance.
Well, I mean, in retrospect, you're correct. But I think that at the time, given what we knew, that was, the decision that they made. So, it is what it is.
Yeah, it is.
We live in a society,
and that's why some of us are complaining.
Yeah, but the issue, I guess that the issue that I have with some of the complaints about what's going on is, like, you can either update your assumptions based on the way the cards have come out, or you can bitch about the cards that came out. You can't change the cards. Like, they've been dealt. So you have to change you.
I think somebody's stealing from the bottom of the pack. Like, if we're going to use this analogy, my issue is not the cards that are being dealt; it's the way the cards are dealt.
Yeah, I mean, I just think that, like, as a human, we have to adapt, right? So, I mean, I don't understand the
no question.
idea of,
Adapt or die.
What do you say to the moral hazard argument about that?
I say that I own Malone Entity's dog, and these covenants don't exist. So give me that money.
Now I'm keeping it on the airlines. Like, the behavior that preceded.
What did they do?
Levered up, bought back.
Oh, get the fuck out of here, dude.
Delta
was
prepare for a
investment
rainy
grade.
day at all.
You are out of your mind. Delta was investment grade. Alaska was investment grade. American Airlines, I have always shit on. The ULCCs run an operating lease strategy. If we want to live in a world where the government runs the airlines and they can't have any capital from private entities, then yeah, let's make them carry 5 years of OpEx of cash on the balance sheet. And, while we're at it, we'll pay the CEOs $150,000 and we can all just ride around in a flying bus. That'll be great.
Isn't that what we do? Have you flown?
No, yes, it's a fantastic experience. It's segmented. You can choose where you want to sit and pay where you want. If you want TSA, you can upgrade for that. If you don't, you get in the fucking back of the bus. Like, it is capitalism.
It's tough for the big fellas riding in the back of the bus, mate. Can't get those knees behind those seats.
Well, then you might have to pay a little bit more for the extended legroom, but you have that choice. Right? Like, back in the day when everything was like a limo, the airlines sucked as businesses. Now they were like moderately decent businesses. I agree they didn't plan on shutting down the entire fleet for 6 months, but like, I don't know. I think Scott Galloway's out of his fucking mind when he talks about this. I think nothing could be further from the truth. He goes into this whole like buyback thing.
Capitalism.
Yeah.
Argument.
I just don't buy it. I think it's a nice thing to say, but I don't think it's actually adapting to the facts as they were.
Well, this is sort of my topic. So let's jump into what I was going to talk about. I saw a tweet today that said that Jets, which is the ETF of all of the airlines, is flying. Everybody loves a good pun on a headline like that, right? So I jumped in and had a quick look at Jets. It's done really well. It's almost back to where it was pre-pandemic, which is kind of, amazing. Markets are forward-looking discounting mechanism, of course, but the thing about airlines is that they do carry a bit of debt. So I looked at the EVs. So I pulled up the enterprise values, which includes the debt. For folks who aren't all the way in the weeds here, the enterprise value is market cap plus the debt. Back out the cash. Airlines have also got liabilities on their planes, but that's not included here. This is just the EV of the holding company. So Delta is basically, its enterprise value is the same as it was at its absolute peak. United is at its absolute peak. Southwest is about 85% of its peak. American's 85% of its peak, and Alaska Air is about 66%. But it had this spike, this weird spike. So then you can't look at the EBIT of these companies because they don't have any at the moment. So I had to go through and have a look at revs. So EV revs for all of these companies. Long run average for EV revs across these companies is less than 1. So that means that they sell about as much of their enterprise value every year. So on a multiple of they're currently on these multiples. Delta's on it's 3.3 times revs. United is 4 times revs. Southwest is 2.6. Woo! No idea what happened then.
There he is.
We're back.
What?
Wow.
Your audio's off.
Oh, it is? Okay.
Yeah.
Well, it's on, but it's sounds like you're in a submarine.
Let me fix it.
Oh, I think I hear us on YouTube.
Here we go. Check, check, check.
There you go.
All right, we're back.
Are we live still?
I think so. This is
Yep,
live video.
We're back.
This is a quality podcast.
It's very high quality. Everybody can hear us.
The computer shut down. It logged me out of Skype, which was super helpful. I've been back here trying to remember my Skype password.
Oh, jeez.
I mean, who would know what that is? Anyway, sorry, amigos, we're back. So, did everybody get everybody got the terrible airline stats? Let's shift to somebody else's topic here. Sorry, fellas.
I think we were talking about moral hazard.
Well, that's a good one. Who wants to take that one?
Bill's pro. I'm anti.
No, I just think that saying like I just think that saying that like we shouldn't have bailed people out is a much easier thing to say in some like classroom or theoretical standpoint than reality. And I mean, I just think that the idea that that like we should not have come to the rescue of asset intensive industries and pushed away investment forever. I mean, maybe not forever, but like, you know, I don't buy it. I fundamentally don't. Now, do I think that there are negative consequences with that? Yeah, but like, I don't think that if you looked at Delta's balance sheet going into all this, a rational person would say that like that was
being reckless.
Yeah, like they just weren't. I mean, it was an investment grade balance sheet. It's like looking at somebody that has 40% loan to value on their house and saying that they're out of their minds. Like, no, that's just the way it runs.
Okay, well, let me ask you this then. Is that the government's job to step in?
Yes. To keep society going and to protect the system that we all live within and to keep the fabrics that we all have had like an underlying assumption together. Yeah, I think that's exactly government's job.
Let me also ask you this. A reset in that industry does not make the planes disappear. It's just the ownership of who owns the planes and is operating them may change.
Who's going to go buy the equity after? Like, how do you finance new airplanes? And do you think that society is better off now than it was 30 years ago?
I guarantee there's a price somewhere that there'd be happy equity buyers of airlines.
Yeah, I mean, that's fine. You're not going to get that price because government actually steps in. I mean, you're not going to get
point.
Okay, but that's not. But I think my point to you is that you're trying to make the world as you want the world to be, and what I'm saying is that's not the world we live in.
I guess I would prefer the world to look more like nature looks like, where systemic problems get cleared more regularly, and instead we kind of sweep them all into a pile and then kick the can down the road. And I don't know if your system actually solves the problem in the long term and maybe doesn't create bigger problems down the line.
Yeah, I mean, I think I agree that if there was a way to have shut down the country and not had mass defaults and not have every asset intensive industry going into bankruptcy court at the same time and having creditors own all the equity, like maybe that would be better. It's just not going to happen. So I don't even understand the point in bitching about it anymore. Like I guess that it seems to me that I've now seen '09 and 2020 happen, and both times sort of like libertarian Austrian Ron Paul people, of which I was one not that long ago, have sort of like complained that the world is not as they think it should be. But I guess my comment back is like, well, then maybe the world isn't like you think it should be. So you either are going to continue to yell into the air or sort of update your priors. Because I don't think that the world's going to change to what we want it to theoretically be. I think we got to live in the world we have.
I agree with that. I think it's something I struggle with, which is, is the world different? Like, is the world different than how I think it is, or have we not looked at a long enough timeline? And I go back and forth on those, and they kind of give you different answers.
Yeah, I mean, like, I get the, well, equity should just be wiped out thing. I mean, I do understand that argument, but I just don't think that, I mean, okay, if you really think that all that's going to happen is equity is going to get wiped out and the world's just going to continue, and you don't think that that leads to deflationary bust, like if you really think that at the moment that the world has stopped, that it's okay to send almost every asset-intensive industry into bankruptcy court, and you think we're going to get through that, then like maybe I just don't understand path dependency like you do. And I'm not saying you, I'm just saying like the collective you. I just think that you're introducing a massive deflationary bust risk into a system that didn't need it. And the path we went down has negative consequences. But like once there's a global pandemic, there are going to be negative consequences. So I view government's job as to mitigate those consequences. And I think that to a large extent they did it. And then I think that it became political and people lost their fucking minds.
I would probably agree with you more if during the good times we ran surpluses and prepared for the bad times as a collective. But we haven't done that at all. Like it's always been pedal to the metal, at least for the last 12 years. And so it doesn't, I don't know, it makes it a little bit weaker that like the argument that we're doing this for the greater good.
Well, that's a separate issue though. I'm talking about 2020. I bitched a lot about the tax cuts and blowing out the deficit 10 years into freaking, recovery
expansion.
or like 7 to 10 years. I think that was asinine. And the idea that, now Republicans are going to complain about deficit spending. Like they lost the moral high ground on that. So we definitely agree that the problem with Keynesian economics as implemented is Keynes always thought that you should pull back when times are good, right? And it's like we just do stimmy. But I don't think that in 2020 is the time to take the stand. Like that's where I just sort of disagree.
Yeah, but there's never going to be a convenient time for austerity.
Okay, that's fine, but 2016 is a more convenient time than 2020. And hopefully, 2024 is more convenient than now. I just don't think today is the day to get austere. I think that doesn't make sense. It's almost reminds me of changing the people on Robinhood's ability to pump GameStop in the middle of the game. Like you don't change the rules in the middle of the game. It's not sportsmanlike.
I mean, wouldn't their argument be that they were trying to protect them?
No, I think that they were. I guess I guess in that instance they had to stop it so that Robinhood didn't collapse, and that didn't collapse everything. I guess that would be the argument.
But they were also trying to protect the smaller investors in there, right? Like the thing had mushroomed, and once those things go parabolic, there's no, it got to whatever it got to, 15 billion or more than that, and then what if it gets to like 100 billion, or if it gets to it like?
I don't think they cared about that at all.
One of those things almost got to 1 trillion. Like that's sucked a lot of people in, that one.
Yeah, well, still is. I don't think that's at all what they were trying to do. I think that they were trying to make sure that when you carve up shares and issue fractional shares and have all kinds of derivative contracts, you want to protect counterparty risk. And they were like on the brink of having regulatory problems because they were undercapitalized.
Yeah, I don't know.
That's crazy.
You can't.
I mean,
just
that's
throw
my
confetti
understanding.
at that.
Yeah, we should be able to throw confetti, right? And push notifications. Imagine trading Robinhood or GameStop on Robinhood and getting a notification every time that the stock moved up more than 5%. Your phone would have just lit up like all day long.
Lots of
Continues
dopamine.
to go up.
Would have felt good.
Oh yeah.
Yeah, I guess, until it didn't. Bizarre world. It's happening to Volkswagen today.
Again?
Really?
I
Squeeze
guess
again, huh?
Yeah, I saw when it was up like 23% pre-market.
Oof. They're coming up with some EVs.
Well, this is where I think this Mike Green argument might have legs. Like, what the hell is going on with this many stocks ripping this much? Is there not enough liquidity in the market?
There's no downside. There's no moral hazard.
I don't think that's it, man. Because I think
you don't think that people aren't in this market because they saw that 2020 March pandemic got truncated and we've bounced back to all-time highs. You don't think that's why people feel
Volkswagen's.
But that's
I don't think.
I'm not talking about it, like every specific instance is going to have its own set of factors. But when you see it in Bitcoin, you see it in Tesla, you see it in marijuana stocks, you see it in GameStop. Like it's just across everything.
Yeah.
And it's to the point where it's becoming systemic, right?
Yeah, I mean, yes, I agree that there is a lot of punting going on right now.
And when do you see that? Is that typically like, what inning do you typically see a lot of that?
Well, I mean, I don't know. Probably the inning that everybody's locked at home and can day trade anything on their phone and get stimmy checks. Like, I'm not sure that's an inning issue. Yeah, I don't know that we've ever seen this.
So you think that all goes away when we go back to work?
I have no idea. I don't know what's going on, man.
I think people are basically back to work at the moment, aren't they? Like, if you're working from... Everybody's on Zoom all day long.
Those people are already working. I don't think there's a lot of people who got laid off who are back. Yeah. I mean, some are, but not. We're still well below like 2019 employment figures, right?
Yeah, well and truly. Do you guys have a topic? Do you want to do your topic before we run out of time?
Yeah, I have a veggie segment I prepared on. So last week we talked about, to get the thickest branch that you can, you need a lot of keep it moist. And this time,
I should show everybody. I got on the inspired by Jake's thing last week. I got myself a kit to make myself a bonsai. So it comes with all the bits and pieces. It was $25 delivered the next day from Amazon. How magic's that?
Terrific. Is that an affiliate link you can put? So this week we're going to be talking about testosterone and investing, and
this is a good on the back of talking about punting.
Right. That's why I waited until it was the perfect timing.
Dopamine.
So some of this comes from this book called The Weirdest People in the World by Joseph Henrich. Pretty interesting book in that it talks about, and by the way, weird in this context is actually an acronym for Western, educated, industrialized, rich, democratic. And what's cool about this book is that it points out this sort of like blind spot I think a lot of us have if you've read much psychology research, in that a lot of that research is conducted on university campuses in Western world. And there's some things about that may not be a very representative of most of humanity, especially if you look through a lot of time periods. We're might be sort of a weird group to examine, and then therefore to extrapolate that out into all of humanity, it might be a mistake.
Interesting.
So in this specific context, talking about testosterone, we're going to start with birds and then shift to humanity. And so testosterone is related to mating and courtship in birds and humans, but what it does is the male birds will ramp up their testosterone before mating season, and they'll become much more territorial. They'll fight with other male birds. They will do these courtship dances and things like that, and it's all testosterone fueled. And what's interesting is to use birds as sort of our analog is that they have many bird species form pair bonds during mating season, just like humans, in a monogamous way. And so they'll, and a lot of the male birds will help with nest preparation and feeding the baby birds once they're born. Like they make a paternal investment. So studying sparrows, the males will ramp up their testosterone levels during mating season, and then it will drop after mating season. And but when they look at other birds, like specifically the red-winged blackbird, which is a polygynous species, so it's like the males look for as many females as they can in that situation, and they will, after mating, like they keep looking and competing for more mates, and their testosterone levels don't drop. So what's interesting then is if we bring that to humans, it's actually the same. And so in our weird world that's monogamous societies, after you get married and your testosterone levels will drop, and then after you have kids, your testosterone levels will drop.
Keep the kids safe.
Well, it is. It's a parental investment. Interestingly enough, if you get divorced, the testosterone levels ramp back up. So it's kind of, but in polygynous human societies, the male's testosterone level doesn't drop. Even so, there's a competition to it. They looked at inhabitants of the Lamu Island of Kenya, where about a quarter of the males will take a second wife, and their T levels stay elevated. So this book kind of goes into some really interesting things on that I don't want to get into, but it where actually the church and its use of monogamy precepts was sort of a control device to keep men a little bit more docile potentially. Anyway, Bill, you look like you had something witty to say.
I did, and then I thought better of it. So I'm just going to keep it in.
So testosterone is typically thought of as making you more aggressive, but that's not quite right. What actually it does is it makes you increase your want to climb the social ladder and outcompete. So that can show up as, it fuels competitive motivation, which can show up as aggression, but not necessarily. It also suppresses fear, heightens sensitivity to rewards, engenders zero-sum thinking, and makes you less trustful. And it's hypothesized that testosterone suppresses the connection between your prefrontal cortex and your amygdala. So it's sort of like your rational part of your brain and then sort of the fear part of your brain, and breaking the connection of those two interacting changes some behaviors. So what else is kind of interesting with respect to that is that suppressing testosterone within a monogamous marriage, the way that it does, actually promotes greater self-regulation and self-discipline, which is kind of interesting. Now, so there was a study that was done to get this back to sort of finance, that so they looked at hedge fund. They looked at 3,000 hedge funds, and they looked at apparently you can correlate the wideness of the face of a male with the amount of testosterone, and the wider the face, the greater the testosterone. So they did these measurements of 3,000 hedge fund managers, and then looked at alpha and how did they do. And it turns out that the higher the testosterone, the more frequently that hedge fund traded, the more they preferred lottery-like stock outcomes, and the more reluctant they were to sell losers. So you had all this kind of risk-seeking behavior with the higher testosterone levels. And also they found in another 2015 study that when they administered testosterone gel it actually increased the optimism about future prices that they would expect in these kind of simulated markets. Interesting enough that cortisol also has similar deleterious effects where for alpha, and it's mostly probably like stress related, right? Like cortisol is the stress hormone. So if you're really stressed out, you make suboptimal decisions. One other thing about testosterone I was thinking about, with China in their one child policy in 2009, they had roughly 30 million kind of surplus men. Like they had because the Chinese wanted boys more than girls. Like there was a lot of, they would abort female fetuses. They would, they'd send them out for adoption. Like it was about, they wanted to have males to keep the line going, right? So they ended up with a lot more males in this time period where they were running the one child policy. And what's interesting is that it was imposed in different provinces at different times. So they could see then that like there was a wave of, more males in this area versus another area within China.
Yeah.
And so they could do studies to see, and like crime rates went up in those areas at the same rate as the imposition of the, 20 years after it was imposed, the one child policy, crime rates went up in that particular that particular province. So kind of an interesting how society has harnessed like our endocrine systems in a lot of ways through different mechanisms. So anyway, I'm not sure of all of the takeaways for being an investor, but maybe, I don't know, if you're looking for someone else to manage your money, you might actually not want the most like strappingly looking male alpha male. Like that is probably going to lead to suboptimal results potentially. I don't know.
I got a comment on the screen. Value guys are low T. That's bad news.
Value is all betas.
I mean, the way we're trading at the moment, that would be true.
Well, I think there's a number of studies that I think have showed that women are better investors,
better traders,
right? Yeah. I mean, I think Jen Ross had mentioned to me that she thought that men were like way too tied to being correct, right? Yeah. And that she thought that women were better at sort of I guess being objective about their positions. I think that's reasonably plausible.
It's just too easy to get ego into it's just too easy, and particularly when you've got other things going on, like you're trying to be consistency bias. You're trying to be, I guess consistency bias is the main one. Ego in it as well. It's very hard to back out of a position. You got to find some way just to punch out when you're wrong. You got to start saying, "I was wrong. I just got it wrong."
Yeah.
What's interesting is that is like sort of diametrically opposed to what would attract assets, right? Like confidence. Yeah. I know what I'm doing. I know what's about to happen. Like that is what puts the dollars in the bank account oftentimes. Yeah. Which is the opposite of probably what you want once it's in the bank account.
You need the super smooth guy at the front and his nerdy girl in the back doing the actual investing.
That's the ultimate combo.
I experienced this in a different way because I played old man tennis last night, and there was this fucking guy there, and I could feel like the alpha energy between he and I. He kept trying to like hit the ball at me and stuff, and I was just like, so then I got in his head. I got like real close to the line when he would go to serve, and he would turn his back when he went to serve, so then I would like back off, and it was all mental games with him, and he always hit it into the net. But I was thinking this dude is straight up like just duding me right now. And it was very annoying. It was very like aggressive. It wasn't even passive aggressive. And I think that, if you allow that to enter the markets, you're going to get shellacked because in my opinion, the problem with trying to prove the market you're wrong is you just don't have either the time or the money to do it, So I think you got to be really honest with yourself. Which it helps to have writing, right, in journals, and like, when do I think this is actually going to be wrong, and update that stuff.
I'm going to write that in my diary.
Yeah, so imagine, I mean, isn't that what Druck was talking about? Like he wanted young guys in a bull market, the beginning of a bull market, because it's like
well, they got no memory.
They have no
one big
memory,
thing.
but also maybe they're more risk seeking, the more they're willing to push it, and they're more optimistic about where the price can go if with higher T levels.
I mean, that's always been that's like the feature of every single bull market, isn't it? That you get the new young gunslingers who come through who, because they're fearless, they can chase it much harder than all the old guys who've seen a few busts, and then they get their first bust and they learn something.
So maybe you need high T at the bottom of a bear market and low T at the top of in a bubble.
Probably works.
I think that's fair.
Do you have a topic, Bill, or do you want me to?
Then you just gotta figure out when the low and the high is. I don't know. We're running late, so we can do some
cues,
some questions. Yeah.
Throw some questions in, guys.
I mean, I guess that the comment that I would have is on the just on the left tail and whatnot is I do think like now you're seeing. So I do think that we somewhat removed the left tail in 2020, but now you're starting to see like the tax ideas get floated. I mean, it's going to be, I don't know how much long-term upside there is, but I think we could get a lot sillier here. It's kind of my operating thesis for the last 2 years.
There's no question it can always get silly. We're like,
yeah.
I always refer to the Einhorn quote that 5 times silly is not more silly than 2 times silly. They're both as silly as each other. So you can keep on going to just any level of silliness. I guess and nobody really knows what's going to happen, right? At any stage, anything can happen. We could easily double or halve from here. I have no idea anymore. Everything just seems totally detached from fundamentals from my perspective. So anything is possible.
I was told that there's no left tail.
Well, it looks that way.
Well, there definitely is. It's just you can't. Well, but I guess that the whole function of government, like if you're going to bet on the left tail playing out, you're basically betting on society failing. So if you want to make the bet, you can. And you're probably going to get paid like crazy when you're right. But I mean, I also think if you're the type of investor that cares about base rates, like how often does the left tail manifest itself? So I just don't understand. I guess if you want to set yourself up for success, I guess just like betting on the left tail just seems insane to me. But, maybe I'll be the guy with nothing and you'll be the guy with, not like you, but whoever will be the guy with everything. And then I can say, okay, King, tell me I was wrong.
Well, there's 2 things, right? There's betting on the left tail, betting on it occurring. And then there's just incorporating it in your range of outcomes where, a left tail is a genuine possibility. And then just sort of...
Yes, I agree with you. But I think that the fear of that makes people way overweight the probability of it. So the expected value of that actually being dealt and government failing, I think, is way overweighted in people's heads.
That's probably
right.
True.
And yes, the expected loss is huge, but that's one of the fundamental tenets of like loss aversion, right? Is like people are so scared of losses that they exacerbate the probability of them. And I'm saying I think that the government functioned okay. And I think that there's problems. I'm freaking glad that I came to a state that's open. I think government in general, maybe like on the state level, doesn't exactly get the passing grade that I'm saying. And I think, we compounded the errors. I don't think I give us like 100% or anything like that, but probably a C+, B-. I wouldn't give us an F.
Florida.
Oh, Florida did pretty well, I think. I know that that's going to like piss some people off to hear, but like life has been pretty decent here.
Well, let me throw a scenario at you. So,
and the deaths per 100,000 have not been like materially higher. So if like data actually matters, I think it's hard to look at what Florida did and say that they didn't. Now maybe they had embedded strengths, right? People can be outside and whatever, but they played the cards that they were dealt pretty well.
But that's sort of the thesis, I think, to what JT would say, is that you're better off having lots of little implementations, like lots of little experiments going on. So you have 50 experiments going on is better than one experiment going on, and then having, every county maybe making its decisions, and then maybe having each individual make their decisions.
I moved my fucking life for that thesis, right? Like, I am fundamentally not like a top-down guy, but I think that when the world stops and the federal government is the reason the world stops, then to not expect the federal government to lend assistance is sort of like not really matching. It's almost like an asset liability mismatch in a different way.
I got a question for you. This is from Betty Swallocks. It's funnier written down, I guess, but Chris Bloomstrand talked about not caring about BRK share price, only performance of underlying business. Surely share price matters eventually, otherwise what's the point of holding the stock?
So this is actually an interesting, I've been playing this out in my mind a little bit. People are like, well, I don't like Bitcoin because it's an idea. And then I got to thinking, well, how, right? Like, it's just an idea, right? It's just like an idea. Well, this matters, okay? Well, what if you're trading minority interests in securities, the idea that it's just a weighing machine over time is literally just an idea, right? There is nothing to guarantee you that this cash ever comes back to you as a minority interest holder. The reason that I think that in something like Berkshire, the underlying business matters is because you can trust the managers to do the right thing with the cash flows that you're entitled to. So if you're in some like maybe, company that you don't really, this is why I think, agency costs are so important, because then the stock price doesn't actually matter. But if you don't trust management to do the right thing, then yeah, stock price matters a lot because you could just be stuck. And I think that, because Buffett will go out and buy shares in, right? And then eventually, maybe you just get huge dividends down the road, right? If nobody ever buys the stock. But, like, what a guy to be partnered with.
I want lower for longer.
Why?
Because then Buffett's got his best, probably most layup deployment of capital at that point.
Into Berkshire.
Same with Malone, like all these guys that are like real capital. Barry Diller, like all these guys that are really proven track records. I don't think you want the stocks to go up.
Well, and this is a fundamental difference. Like, are you a business owner, in which case you want partners retired from ownership interest potentially at the right price, or are you a trader who wants the price to go up?
If the price isn't moving, you can always look at the fundamentals too. You can see, is the book value compounding away? Is the earnings and return on investment, is return on investment sustaining or growing wider? Is earnings growing? If the share price isn't responding and they're buying back stock and all of that stuff is going on under the hood, then that's the absolute best of every world, because you're going to keep on earning, you keep on buying that stock, and it's all going up in value. You're getting a better deal every time you buy.
Yeah, as long as you don't need the liquidity.
Well, we're talking investment capital here.
Yeah, so I'm just saying, I think like that's sort of the risk in Berkshire, is maybe your duration is slightly off from Buffett's duration, so then he's not returning capital when you need it, but that's on you to plan for, right?
Yeah. Got a super chat here. Thanks, Jonathan Wallace. What do you think is the probability of a nuclear attack or equivalent event prior to 2071? Can you hedge for that?
My guess is as good as yours, and probably not. I don't think you can hedge for that, no.
Hmm.
I mean, you could buy guns.
These big bad events happen every now and again, right? Every 20, 25 years, something really nasty comes along. Can you hedge for it? I don't know, but I think it's interesting to think that that's like one of the things that Buffett thinks about is a nuclear attack. One of the things that he's worried about is a nuclear weapon going off.
Yeah, well, he would say it's inevitable over a long enough time horizon, right? But I don't know.
Yeah,
he's thinking about the things.
Don't live in a big city, I guess, would be one hedge.
Yeah, or you could, I guess you could adopt what we're talking about, right? And you could say, well, if that were to happen, then given the facts that have played out in 2009 and now, the government's probably going to spread money everywhere, so own gold, I guess. Like, maybe that's the way you hedge.
You could move to Los Angeles. It already looks like one's been detonated here.
Yeah, we already went on.
Already living in the
20 years
rubble.
ago.
I was watching the Dredd, Judge Dredd, and they have the big wide shots of the city, and it's like megaopolis, like in the future where everybody just lives in these gigantic cities. And I was like, it looks like LA.
And that's the hellscape.
The hellscape, yeah. What else we got?
Somebody asked about the streaming, like Discovery and Viacom. I mean, your guess is as good as mine. They seem a little bit rich. They were probably too cheap. We'll see. I'd rather own Netflix than Discovery at this multiple, I'll tell you that. All right, they're trading at the same 2025 multiples. Okay. We'll see.
Isn't it
2025? Who the hell has...
Yeah, how do you know
that's
about
what
that far?
everybody... Well, first of all, that's what people are looking at. And second of all, you guys laugh, but if you're talking about being long-term focused, like I don't see how you can say I am a time arbitrage long-term investor and not think about 2025. I just fundamentally think they're separate. Now, the precision of the estimate is clearly not right. Like I don't disagree with that, but you got to at least think about this stuff. Unless you don't.
There's a lot of growth in Netflix to make that happen, though, right?
Yeah.
That's probably. I mean, whether that's going to happen or not is the sort of question for each individual person. But just to throw it out there like it's a done deal, I think that's what we're laughing at.
Well, that's what you're doing with Discovery here too. So I mean, it's the same bet now.
I mean, Discovery was in my screen a year ago. It was cheap a year ago. I don't have any particular view on it now.
Well, what I'm saying is if you're going to laugh at Netflix, I think you got to laugh at Discovery.
Yeah.
Because it ain't cheap anymore. I assure you of that.
Well, that's an interesting point because that's been something that's like it's related to my Airlines example earlier. Like for whatever reason, small, cheap, junky has just had it's having a few months. It's having a moment here in the sun where it's trading like, software as a service did. It's trading like tech did a year ago. Why?
Yeah.
Is my question.
I don't know. I mean, Discovery's market cap since 12/31/20 has gone from 1.4 times sales to 4.5 times sales.
That's expensive.
So, I don't know.
Why the run in small cheap junk? Why the run?
People trying to buy anything they can.
Yeah, I mean, a lot of that stuff was faced an existential crisis.
Yeah.
And if, the smaller you are, the less likely you are to get your left tail chopped off by the government. The junkier you were, the more closer you were to potential existential threat. A lot of those were levered companies too, which, that much closer to the edge. So if all of a sudden if people can look past all that now and say like, well, if everything's going to survive, let's buy this. So I sort of makes some sense to me.
I don't think so. I think it's betting like you see everywhere else.
I think so. It's just the last thing that hadn't
ripped. Yeah.
Yeah. Maybe.
There's some big Momo rebalance coming up here where they're going to be buying a whole lot of finance and energy. Evidently, those are the two sectors that are going in. Does that keep it going?
Been priced in? Is that the idea?
Well, being added to an index seems to that keeps you going. I guess I don't know. Anything that I thought I knew, I no longer know. I've got back to zero knowledge of this market. Just completely baffled by everything that happens every day.
Yeah,
Curate is one I want to go down. Somebody asked if I have an update. I don't. My update is do your own work.
I mean, that has been a kind of a kick in the intellectual nuts this last really year. It was like, if you had told me that you were going to have all the things that happened, you would never say the market would be up and ripping and all-time highs and retail froth and all the other, all of other Grantham's boxes checked. You just never would have said that. So if that wasn't enough to convince me that have literally no idea where things are going, then I'm not sure whatever will.
Yeah.
The
it's a
only
baffling
thing I
market.
knew is you couldn't wait to see the numbers. That's the only thing I knew. I had no idea that it would be this. But we had that conversation. I literally said you can't wait to see the numbers. I mean, that happened. So that's like something that I did believe. But this is there. It certainly seems as though a lot of return has been pulled forward. A lot.
Next week is the anniversary of the bottom, so we're gonna have to do a special show.
You think it'll lead to a sell-off? Like a lot of people, taking gains?
Nothing leads to sell-offs. There's nothing leads to a sell-off in this market.
I don't know, man. I don't
understand those words.
A lot of things flip into capital gains, and now you're looking at tax increases. I don't know. I could see it.
Little race to the exit of some.
See, what you're doing is you're applying logic,
amount.
and logic doesn't work in this market. What it's probably going to lead to is a gigantic ramp.
We're in Costanza mode, huh?
So that's my prediction. Gigantic ramp over the next 12 months. I just want this market to show me that I'm wrong. Prove me wrong. All right, amigos. I think that's full time. I can hear the whistle blowing. We're in injury time at the moment. So until next week, which will be the anniversary. It'll be a fun one. Peace.
Thank you all.